Good afternoon, everyone. My name is Pete Horne, and this is Dan Coast. We're from Henderson Brothers, and our session today for Security Day is going to be talking about a subject that is not as technical as probably the sessions and speakers you've had before. Now, just because the technical nature is not going to be as in-depth as what we've hit upon in previous sessions, we still want to make the point where our topic, protecting your balance sheet in the event of a breach, and it's a more financial and insurance geared conversation, is going to be something that ends up touching security vendors, your security team, networks, everything that goes into the entire collaborative approach that is necessary to respond to a breach in a positive manner. So we will get into a few things on the insurance side that we'll try to stay high level, but some of the provisions are just kind of examples of what a detailed approach would look like. So a little bit about Dan and I to begin. We represent the insurance and financial services company called Henderson Brothers. And Dan, can you tell us a little bit about the company and yourself, please?
Absolutely. Thanks, Pete. So Henderson Brothers, we've been around since 1893, and if you look at our logo, we got our start in the river business, insuring all the tugboats and everything going up and down the river. But over 127 years, things have certainly changed in the insurance marketplace and landscape. And today, cyber insurance is a very important aspect of what we do for all industries that we serve. So Henderson Brothers, there's really three main divisions of our business. Pete and I representing our property casualty unit today. We also have a retirement plan group and employee benefits. About 170 folks located throughout the region here and working via Zoom for the most part here the last 7 months. So we appreciate the opportunity today. And so I've been with the firm for about 15 years, and I hold a designation called CCIC, or Cyber Cope Insurance Certification. So I've been working deeply on cyber insurance for better part of 10 years now, and unfortunately we've seen a lot of claims in the cyber arena the past 5 years or so, and we're going to speak about some of those trends today. And Pete, how about yourself?
Sure, thanks, Dan. I am a licensed attorney here in Pennsylvania. I serve as legal counsel in-house for Henderson Brothers. I practice at a private firm that was based in Pittsburgh a few years back. And one of my practice areas there was data breaches and cybersecurity data breach laws. I'm going to not get into anything legal except for maybe...
Thank you, Pete.
I'm not going to have... no promises, I guess, Dan. So in total, I've been with Henderson Brothers 9 years. I had a 3-year gap working at that private law firm. And so Dan and I together, as he alluded to, we're the cyber liability practice leads. So whether you have true COPE coverage and program design issues, or you have more claim, legal, maybe incident response details, we work together to formulate a cyber program for our clients and coach and respond and help them get to the partners that they need to in the event of a breach.
Perfect.
So why do we want to talk about data breaches? We've had other sessions today in Security Day that are talking about software practices, other security protocols that you can set in place that will prevent the breach from happening. And that needs to be a best practice and best in class setup that all of these organizations that have this type of exposure should be doing, right? So you need to be vetting your IT vendors. You need to be vetting your other security monitoring vendors. That landscape has changed tremendously, and I know that with IDEO Integrations and Blue Bastion, they've deployed some of the best practices and software out there, right? So that's step one. Step two is this is ultimately a financial and budgeting issue for most organizations, right? There's data points out there, there's commentary out there, and I'm going to talk a little bit about it here shortly, that this is a prevalent issue. It's not really about if I will have a breach, but when I will have a breach. So kind of planning and talking about the financial implications of that, including the insurance products that are available, is something that really needs to be discussed. So talk about the cost of the breach and how to kind of budget or fund that type of problem. And then Dan and I are going to talk a little bit more about what does proper coverage look like, or what are the coverage trends. And then finally we're going to wrap up and kind of pull it all together, whether we're talking about your vendors, your response, the financial piece, and how it all kind of works together.
Just a couple of points to add to that, Pete. The insurance placement is, we call it the belt and suspenders approach to risk management. Certainly all of your procedures and policies and software are at the core of your posture, your cyber posture, but the insurance is another critical component to that. Another thing I would add is, these breaches, they are now agnostic to industry, agnostic to corporate size, and they're covering all aspects of business today. So we've seen the trends really kind of spread out to all industries now.
All data has value, correct. I guess, in the black market.
Correct. Yes.
Or the dark web. So let's talk a little bit about where we're going to in terms of the prevalence here. We have the World Economic Forum report. It places cyber attacks as a top 5 risk. I mean, that's ahead or in parallel with things like climate change and global wars, right? I mean, the sobering and startling, placement of cyber attack being up there with those other type of cataclysmic events that should be shocking enough, right? It's a well-run criminal or geopolitical activity. We have a lot of nation states that engage in this type of behavior. It's costly globally, $600 billion, and it's more profitable, right? You got more and more people, bad actors, drawn to this type of activity just because they can make more money doing this as opposed to other organized crime or drugs or other trafficking. I thought it was interesting, the cybercrime, the last bullet point there, where if it was its own country, its own GDP production, measurement area, it would be the 13th largest economy globally. So, a lot of what we're going to be doing here is addressing, those types of trends going forward, right? If more and more bad actors are going to be entering this game, what is that looking like? Obviously, we've talked a lot in security today about technical details that you can do to prevent that from your network, but here's the financial side. And Dan, if before we get into sort of the cost of claims,
sure,
if you can give me a little bit background on sort of like the evolution of this coverage in general and how it's now addressing cost of claims and premiums as well.
Yeah, so if we go back 10, 15 years ago, there were few buyers of cyber insurance. The process to obtain the coverage was very cumbersome. 10, 15-page applications, it was very expensive, and there were very few markets that were really early adopters of cyber. Fast forward to where we are today, and this is a large area for the insurers to be participating in. There are many more participants from a capacity standpoint, and quite frankly, the ability to purchase has become easier. And I think pricing has continually come down over the years. Now, with all of the activity that we are seeing from a breach standpoint, we are seeing a firming of the insurance market around cyber. But where we are today to where we were 10, 15 years ago, I think we're in generally a better place. And there is more data to support the decision making around limits of coverage that we buy, looking at benchmarking and trending to understand organizationally what the risk is and what the impact of the organization could potentially be.
Yeah, and something that we're talking about here, obviously, is cyber liability policy. We're going to get into why a policy is likely necessary to address these costs, we're going to hit some high-level coverage responsiveness where a cyber liability policy can help you with data restoration. It can help you with notification of those that were sort of the end user breach victims. It can help you sometimes, depending on the policy you get, with hardware costs. It can help you with forensics. It can help you with legal fees. There's a entire spectrum of different costs, and we're going to talk about them here, but the idea is each record has sort of a price. We're showing here just one of the surveys that are out there. IBM did one. This is probably one of the more recent ones that hit the market, showing that records in the US fetch the most in terms of what they can be sold for, what they're going to be ransomed for, and what it costs to sort of recreate and restore those records in the event of a breach. So,
and depending on the type of record, whether it be say a protected health information, that record may double from what you see on that document in front of you.
Right, yeah, so average total cost affects, obviously it's an average, so it's different in different industries, but $400,000 per year in terms of the average total cost, and that number's going up, that's a significant balance sheet item that, all organizations should be preparing for, right? And we'll kind of walk through the risks and rewards of, okay, what does your security posture look like versus what is your cash flow in terms of maybe paying for a claim that's from your own balance sheet and self-funded versus transferring that risk to a carrier and paying the premium. I mean, there's a lot of moving parts there. So, you need to have a strong team that's, whether on your IT and security side, your finance and insurance side, and then just general sort of exposure and management operational side.
Pete, you bring up a good point about that idea of team, and through a cyber insurance policy, effectively what that policy is giving you a team of experts to help respond to a breach. And there's some important things that we'll talk a little bit later in the presentation about how you structure that policy to make sure it's the right team for your business.
Right. So this is an expensive problem, and sort of a final statement, not all organizations recover from this problem, right? So if you look there in red, it could be an existential, it could be a solvency, could be a pretty significant event for your organization, right? So these financial ramifications really need to be at the highest level of your organization, right? You need to have your IT leader, your finance leader, your management or other kind of operational leader all working together, whether it's addressing this problem from your exposures, your operations, and how you're handling your finances, and then work that into, as Dan mentioned, how the policy and how your relationships in the marketplace can build a good team around your response and planning for protecting against incidents and responding to those incidents. So what are your options in putting together the finances there, or funding an expectation that it's more of a when question as opposed to an if question in terms of a breach? So there's sort of two sides to this. You have your insurance, and I have a parenthetical there on this slide for plus technical defense. Again, that never goes away. Everything else that you've heard here in Security Day, the technical defenses need to be there. That's your foundation. You need to hire the best partners you can, and that doesn't get reduced in any way. In fact, that's only becoming more and more important as the sophistication of these bad actors increases. Their backing from lucrative past history, and maybe nation states are funding them. Like technical defense, I can't emphasize that enough. I know it's in a parenthetical, but that needs to be there. So with that emphasis, we still have insurance versus your organization's cash reserves, sort of the self-insurance. And it's really a cost-benefit analysis and a risk transfer. Here are the considerations. You see some of the bullet points there. If you do the insurance, then an underwriter who, looks at these types of risks and organizations similar and dissimilar to you every day is going to price your risk. Your premium dollars, you could be spending that in other ways, but they do have an opportunity cost, but there's still some certainty. You ultimately know what premium you're going to pay. Risk is spread out throughout the marketplace. You have major carriers that are coming in and saying, I have the capacity for this, and I'm going to take X premium volume. You have another carrier that comes in and says, I'll take Y premium volume, and the risk is sort of spread out from an organization that maybe has high risk, low risk, and that's kind of reflected in your premium dollars in the underwriting.
Yep.
You pick your limits, and it's a fairly complex buying decision. I mean, even if you have a complete and thorough understanding of all of your own technical issues and what might be, firewall weaknesses or anything else that, maybe human training weaknesses. Human error always seems to be the kind of gotcha in your ransomware or other phishing attacks. But, you have to account for a lot of those things. And, the policy has a lot of different bells and whistles and other provisions in it. Mm-hmm. It's complicated.
Yeah, and one thing to note too is, as we're designing these programs, and I'm sure many of you already have cyber liability policies in your organization, it'd be good for you to know what's our retention too. Retention is almost another word for deductible, and that's how much you have to spend on a first dollar basis until you actually get into the insurance policy proceeds. If you have a really large retention, you're self-insuring that first percentage of that claim. So it's important for you to know what that number would be and how that impacts the partners that you have embedded within that policy as well, right, Pete?
Absolutely. But, so Dan, with your clients,
yes,
you mentioned previously that, carriers have sort of improved their ability on the applications and kind of streamlining things. It's more intuitive in buying. But if I was one of your clients and I was looking to buy, what would be that process?
Sure. So, first let's understand what the exposures are of the business. How many records are held? What's your current security posture, the technology that you're using? Do you have a strong cybersecurity posture? That's very helpful when presenting a client to the marketplace. The better that posture, the more preferred pricing they will get from the carriers ideally, and it also opens up accessibility to more carriers.
So if I'm a trucking company and I have a great safety program, I'll probably pay less premium.
Not necessarily.
Not necessarily. But if I'm on the cyber side, right, chances are if I have a great safety security program,
correct.
I could pay less premium, right?
Yeah.
And even if you don't have any of those things, you want to work with a partner that can help you identify what potential gaps or weaknesses you have, and sort of, when you're filling out an application to get that insurance policy, how do we present things to say, hey...
Sure. Let me just give you an example. Just in the last couple of weeks, we were going through a client of ours was buying a business, and this business was in the healthcare space, but they didn't have multi-factor authentication, they didn't have encryption, they didn't really have basic breach response, right? And so as we went into the marketplace, and some of these questions on the application were no, that gave pause for concern for many of these markets. So it is information that's important, again, kind of that in that application as we're going through it, that a lot of these cybersecurity measures are already in place before you go to the marketplace. Now, that doesn't mean that you're not going to be able to get coverage. What it does mean is you're probably going to have less market availability, accessibility, and your pricing may be a little bit higher, and that retention may be a little bit higher. So the better the risk, the more options that are out there.
Right. So you helped me through the application.
And we would also do some benchmarking. Let's go and look at, based on your industry, revenue size, employee count, what do we think the cost of a breach would be? There's some great tools out there that we can use to identify the cost of the breach, and that data is important to help us identify what limit of insurance we should buy. As opposed to throwing a dart against a board and saying, $1 million feels right, let's actually do some exercise and benchmarking to see what that adequate limit of insurance is.
Okay. Right, so you pick that, fill out the application, you go and get quotes essentially.
Correct, yeah, we would go to market, we would take that information, it would be our job to then go to market to identify what carriers we think would be right for the industry, the size of the program, et cetera. And then we would come back to you with options, lay that all out there and let you decide based on the pricing, the coverage design, the partnership within the policy, who those teams are, and that would be helpful for you.
And then we bind the coverage, right?
And we bind the coverage, correct. Thank you.
So that is a fairly involved process. It's good to have a partner consultant to help you through that. Obviously, we're going to be talking to some of your other tech partners. It's not unusual to have, your IT team, internal or a vendor, external, help you fill out some of the applications. And you transfer that risk, and you kind of have the certainty of, okay, I at least know that for my coverages X, Y, and Z within the cyber program, the carriers now has that risk to it. The other side, sort of the blue box in the bottom half of the screen, is you do all that yourself.
Yep.
So if you could still obviously work with an insurance and financial consultant to kind of walk through the exercise of an application. You could benchmark, you could price, your cost of breach on your own. But it's really an internalized process. Unless
and for most businesses today, I mean, the cyber policies, as I mentioned earlier, the pricing continues to go down, and it becomes a very inexpensive cost of capital ultimately.
That's true.
Why don't we talk about some of the coverages that are contained within the policy?
Right. So here we have every policy is different. I'll let Dan hit some of the highlights here, but you can see on the screen now, these are sort of considerations and even some trends that we'll get into in terms of what a cyber liability policy can offer protection to your organization. Dan?
Sure. There are really two buckets to consider when thinking about a cyber policy. We have what's called first-party expense and third-party expense. I'm going to focus a lot of my attention right now, though, on the first-party expense. And really what that is what are your costs as the organization if you experience a breach? We've seen the majority of claims today, the claim dollars are being spent in the first-party bucket. And that bucket is, a lot of times today, ransom attacks. We're seeing a tremendous uptick in ransom attack, not only from a frequency, but also from a demand standpoint. Pete, can you speak to what you're seeing in that arena from a ransom attack dollar amount?
Yeah, I mean, so these are all a strategy where the bad actor is looking for a low-hanging fruit, and they know that, hey, that data is worth more to you, your organization, potentially, than what they could sell it for on the dark web, the black market, right? Mm-hmm. So they're hanging out all of these phishing, no pun intended on the phishing poles, and the hooks are down there, and they're trying to figure out, all right, what organization is weak, or what has potential for human error, and they get a bite, and they say, all right, well, our baseline is a couple $100,000 just to unlock your own data. Yep. And most organizations kind of say, well,
I need to work and do my job every day, and I need this information. And so what's happening is these ransom attacks are spread, as I mentioned, it's industry agnostic. It's a manufacturer in the Mon Valley to a healthcare company in Columbus, Ohio. So it really does not matter. What matters, though, is that what we're seeing is a trend of the ransom demands continue to go up. These actors are more sophisticated. They're more embedded in your network. They know how much money you have.
Right.
They know what your balance sheet looks like. So we have this ransom attack. So what do we do? At that point, we've got forensic expenses. We've got legal expenses. We have to pay the ransom demand. Well, the good news is if you have a cyber policy and it's designed appropriately, those should all be covered up to the limit of insurance within that policy. So that first party bucket becomes incredibly important. Now let's say you're a manufacturer and now you've been down for 3 or 4 days because your manufacturing production systems are no longer operating because of the breach and it shut you down. Well, we embed business interruption loss into this cyber policy. And there's even coverage for a reputational loss if the potential that you've been breached and now customers are leaving you because the information was identified as being breached. We have that we can build into the policy as well. So there's a lot of endorsements and bells and whistles that we can put into a cyber policy to really cover a robust amount of exposure that you organizationally would have. So that's the first party side of things. The third party is, okay, a breach occurs within our network, and now we get sued. Somebody's information has been privileged in the marketplace. Now they've had an issue and they come to us. Well, guess what? Now we've got to defend that lawsuit, and maybe there's a potential settlement that happens as a result of that. So we have that we also have to contend with on the first and third party. So both of those buckets are incredibly important, and making sure that the program is structured adequately for that.
Yeah, and Dan, if I could draw everybody's attention to number 4 there. It's kind of hidden at the bottom, but it's called assumed contractual liability. So not to get into all types of different insurance contractual risk transfer, but third parties that are dealing with your organization, they now know, okay, you're handling sensitive data X, or you got payment card identifiable information Y. You have data that is sensitive. So when we contract, I'm going to say, Dan, I'm giving you my data and I trust you with it, but I maybe don't trust you that much. So can you agree in the contract to indemnify me, to make me whole? And so if anything happens to my data while you're in care, custody, and control of it, you got to pay me back big bucks. Right? So that is becoming more and more common as parties kind of negotiate their contracts and they exchange data. Well, a big trend on the cyber liability side of things is, how do we get coverage for that? Well, it used to be, 5 and 10 years ago, either you couldn't get it or you had to pay a lot more via endorsement to get it. Now we're seeing in this kind of theme of modernization of the forms is we can get that built into most standard policies now, right? Where almost on a blanket basis, if I enter in a contract with Dan and then John and Susan, then I can have basically my cyber liability policy respond no matter whose data it basically has an incident related to it.
Yes, and I would encourage you all to, in your service level agreements, master service agreements, look at the language from a cyber insurance indemnity provisions. It's in there. So, very important stuff.
So, those are some high level. You got first party, you got third party. There's a number of other bullet points over there that you can see on the screen that cover things that are sort of in the weeds in terms of, hey, are these truly related to an incident, or are they more, an intellectual property infringement or a straight privacy issue? You got public relations expenses. Dan mentioned reputation loss. I mean, a cyber policy really can be all-encompassing, and a lot of these things may stem from a breach, right? But some of them can happen independently, and a cyber policy could be more than just just responding to a breach. Another item that I want to talk about is errors and omissions. Lots of tech companies have a combined form. They're professional, what they're actually doing, designing, consulting on for their clients. And then the cyber breach. Many carriers, if you're in the technology space, will give you a combined insurance policy that will cover both of those types of risks. We kind of promised that we were going to get into the weeds, but I have a few examples that get into the weeds a little bit. And these are kind of, some of them are common, some of them are just kind of good to know, keep in the back of your mind is if you ever get into this situation with, you're looking to buy, you're looking to do your renewal on your cyber liability policy. One is like rogue actors, intentional acts. I have a bad apple that works in my organization.
Inside your own company.
Inside my own company. And he or she decides to create a breach event because they're disgruntled or they're unhappy, but in an intentional way. A cyber policy, and there's some mechanics to how that will work, but by and large, you can get coverage for those rogue actors that do bad things. And obviously, you're dealing with people. People are unpredictable. But it's nice to know that there could be coverage out there for that. And obviously we would look at the policy and help you make sure that you have the coverage you need for rogue actors. Dan and I mentioned a few minutes ago about this assumed contract, third-party contracts. I'm not going to read what's on your slide right now in terms of how that language unfolds, but the example we gave earlier of if I entrust you with my data,
correct, and
we agree contractually that, hey, I'm taking your data and I trust you with it, but if something happens, you got to compensate me.
And this is really at the onset of developing the cyber program, working with your IT team, legal, and in conjunction with your broker, developing this program to be adequate to encompass all of these things.
Right. If you're entering into contracts that involve the exchange or even access to data, this is something that we would look at in terms of your coverage. Finally, again, this was an example I pulled when I was listing those bullet points on the last couple slides, or a few slides ago, where a wrongful act that you could get coverage for, sort of a claim, it's broader than just a data breach, right? We got copyright infringement that's highlighted there in a red box. There is, trademark issues, other kind of intellectual property claims that would fit underneath a cyber liability policy. So it's just nice to know that those things are out there. It's hard to kind of protect those things in other areas, other insurance vehicles, other self-insurance vehicles. So a cyber liability policy is kind of fitting that need in the marketplace. So let's kind of wrap up a little bit here, right? I mean, how does this all come together, right? Maybe you have a policy, or maybe you have some earmarked reserves on your balance sheet to deal with data issues, protection, data incidents. But what's the best way to do this, right? How do you form your vendors and everything together? Well, we obviously want to be proactive, whether you're buying this, whether you're implementing your team in advance of a policy, or if you're not doing a policy, you still want to have these kind of permanent vendors.
And it's important, in the onset of developing your cyber program, or if you have a program already, as you're heading into a renewal period, to be negotiating with the carrier who those vendors are embedded within the policy. If you don't know who they are, I'd suggest looking at the policy, because they should be listed on the policy, and that can be forensics, legal, breach response, all kind of in there as vendors and services that are offered. Some carriers actually have pre-breach services where they'll do a dollar-for-dollar match up to, say, $3,000 or $5,000 for the organization. Pen testing, for example, is one that's common within those pre-breach services. So my point being, as you're negotiating the terms of the policy, if there are certain vendors that you really want to work with from a breach response standpoint, ask the carrier, will you approve this vendor? Will you approve this law firm? Because we really want to work with them. And they may say yes, they may say no, but I think you should be asking that question.
Absolutely, yeah. And the main takeaway with sort of being proactive and putting in your permanent vendors in place is your dollar goes farther. Whether it's insurance claims dollars that are being paid out by the carrier, or they're your dollars, or they're within some kind of retention. If you have a vendor who knows your systems, maybe they're doing lateral movement monitoring, or maybe they're your hosting firm. If they know how to restore your data, or they already know what your firewall rules are, they're already monitoring your logs. If they are,
why reinvent the wheel here?
Right. If you have a breach and you didn't have anybody in place, somebody that's already knowledgeable about your network can fix that issue more so than somebody just flying in that you hired 3 days after the breach when you learned about it.
And at forensic costs being $400 or $500 an hour now, and if you've got that retention that you're on the hook for maybe the first $25,000, that becomes meaningful. So it's good to have this all laid out at the onset. That policy should not be just collecting dust. You should know who those partners are within the policy. So if you do have to engage it, you know where to go.
Yep. So, there are a couple other bullet points there, but they all kind of deal with sort of like the cohesiveness and consistency. You're kind of getting out in front of things.
Sure.
So it all comes back to the more of a when question than an if question, and that's why we have things like Security Day and sort of all these preparations. So additional services, we kind of mentioned some of these. There are, security, phishing training, pen testing, sort of news and staying current. There's the pre-breach hotline services, response plans, written response plans, which are required in many settings. These are all sort of additional bells and whistles that are not the coverage bells and whistles that you can get. It's just being proactive, talking to your insurance broker, talking to your vendors, talking to the carrier, making sure that you're doing this in advance. So, we're happy to have been able to talk a little bit about how this is sort of a pressing financial problem today. The data breaches are there. Obviously, there's a necessary spend there on the foundation of all of the security and network safeguard protocols that you're going to put in place. That's the foundation. In addition to that, there are also sort of the insurance or other ancillary type things that you can do, to kind of protect and then respond to a breach.
Yes, and if there's any follow-up questions, both Pete and I are on LinkedIn. Feel free to send us a message. We're happy to answer any questions or offer any guidance relative to cyber insurance. We appreciate your time.
Yep. Thank you all for today.